Hello and welcome to Pro Trader Strategies market commentary for Wednesday, November the 25th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that it all comes together and impacts the markets with some of my market analysis. I do the same thing for you folks out there in these daily market commentaries, but I'm going to go a little bit further and talk about those option strategies I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. We aren't picking option strategies out of the hat here at Pro Trader Strategies. No, what we're doing is we have created a streamlined process for you guys to follow your assumption to find the right strategy at any given time. So what we do is we look at our assumption, dig into the internals around that underlying, and find the right strategy for you. All right, so without further ado, let's get on with some economic data and see how that's impacting the markets today, because today was the day where we get all kinds of economic data. Not so much across the pond, but it all rolled into today because tomorrow in the United States we have a holiday, Thanksgiving, a holiday called Thanksgiving. So markets will be closed here in the United States, and therefore they usually roll all of the economic data into one day. And so let's get on with it. Preliminary GDP, which is gross domestic product, in line with expectations. Unemployment claims a little bit higher than expectations, coming in at 778,000, expected to be 732,000. Also revision to last month's number, up by about 6,000 as well. Core durable goods orders coming in at 1.3%, expected to be 0.5%. So higher than expected there is good. Durable good, one thing, remember, core durable goods excludes transportation. Durable goods orders coming in at 1.3%. When we're adding back in transportation items, expected to be 1%, and a revision to last month's number, up from 1.9 to 2.1. Preliminary wholesale inventories rising a little bit at 0.9%. That could be ahead of the holiday season, that people are starting to stockpile inventories, right? So that's a little bit of something that we're going to have to keep an eye on here. And it was expected to be 0.4%. GDP, preliminary GDP coming in at 3.6%, in line with expectations. Michigan, University of Michigan consumer sentiment, 76.9. That's in line exactly with expectations. Personal consumption expenditures price index, unchanged, which was in line with expectations. New home sales knocking it out of the park, coming in at 999,000, expected to be 972,000. But something to keep in mind, we got a revision, a huge revision to last month's number from 959 to 1,002,000. So rolling that all into this number, we've got basically a couple of numbers right in a row above a million if you add in that revision there. Just crazy how robust the new home or just the home sales market is right now, and that again showing up here in this data point. Personal income, you guys, coming in at negative 0.7, expected to be unchanged. They revised last month's number down as well from 0.9 to 0.7. That should definitely cause a bit of a pause in anybody's thinking, because that personal income drawing down is never a good thing, especially heading into a holiday season. We know we're kind of expecting that, right? We are seeing people get hired, but we're not seeing any wage demand from these people because they're looking to take any kind of job they want. So we got personal spending coming off. Personal income coming off while we've got personal spending ramping up. Personal spending coming in at 0.5%, expected to be 0.4%. All right, that was ramping up. That's something we're going to have to keep an eye on with the banks and the credit cards, because if their income is coming off but their spending is ramping up, that usually means that they are borrowing money there. University of Michigan inflation expectations in line with expectations at 2.8%. And then finally, we've got crude oil inventories, a drawdown of 800,000, expected to be a build of 100,000. That's almost $1 million or 1 million barrels drawdown. We've talked about OPEC cutting supply a little bit. We're also seeing manufacturing sectors start to ramp up a little bit. That's going to give demand to crude oil. With lack of supply should drive prices higher. That's simple supply and demand, right? Right now, we are above that 61.8 Fibonacci that I've been talking about. That is the line in the sand that we would not really, as a consumer, don't really want to see go up and above that. It is going to be an indication as forward guidance as to manufacturing picking up, demand picking up. Part of it has to do with the supply limitations there. With Biden coming in and shutting down fracking, that's going to limit supply here and drive prices higher as well. So that, all of those things being said, we're seeing crude oil get a lift here. I will hope to see it settle below that $45 a barrel. That would mean we're kind of roll back over to the point of control. A breakout above this, we could be looking at $50 a barrel in a matter of days, maybe next week or something like that, as those shorts would be getting put on their heels. Gold futures up about $4 on the day. It did stay above that 200-day simple moving average that we've been keeping our eye on. Now, I put on some bullish trades on that a little bit early. Normally, no confirmation. I was, catching a falling knife here, but I thought it would find support around that 200-day moving average, and it has so far found that support. Real inside day, though, today on gold, so it's not giving us a whole lot of guidance as to if we found a bottom here yet or not. All right, bonds moving higher by about 9 ticks, pretty much unchanged on the day. We've got a pretty mixed bag over in the equities. We got the VIX moving a little bit higher here. Dow Jones Industrial Average off by about 200 points after making an overnight all-time high. That is not the day session. Yesterday was our high that we printed during the day. NASDAQ in positive territory, so that whole reopening trade did not last very long. I don't know that that really is out the window yet at this point. I think there's some profit taking going on ahead of this holiday weekend. A lot of people probably won't be working on Friday either. So we've got the NASDAQ moving higher and the E-mini S&Ps off. So that whole rotation we started thinking was starting to happen kind of flipped again today with the tech sector moving and the blue chips and E-mini S&Ps coming off. You can see overnight we created the high. That was the same one we kind of saw over there in the Dow Jones. And overnight just pretty much a wet blanket. Not anything because we saw any economic data across the pond that was starting to throw this into a tailspin here to the downside. I think it's more so we've had a couple of days of nice big rallies and people are thinking, hey, it's time to cover those trades heading into the weekend, and that's what we're starting to see there. All right, other than that, I'm not doing anything. I'm holding on to my Lululemon trade. It's finally starting to work out here. We have on, let's just say GDX, not really giving me any indication here. It kind of looks like a little bit of a bottom. Finishing at the top of the range today would look much nicer for me. And Lulu is a trade that I put on. If you guys remember, I put it on for the long iron condor in there, all right? Actually, iron condor in there. Actually, no, it is condor. I was right. I'm trying to think of my ARB signals. Getting a little rusty. So the long iron condor in there, basically I'm long the 260 puts and short the 230 puts for that part of the wing on the downside. That one's out of the question at this point in time. I'm pretty much worthless. But on the upside, I am long the Dees 330 calls and short the 360 calls in there. So you can see I'm only $5 away on the upside here for it testing my short calls. That is where I am going to look to cover. If I can get a market to move, this market to move up there, nice move today at that 360 area is looking to where I will be pulling the ripcord on it. Right now it's profitable. I'm looking at around, I think, getting out at 17. I bought it at 14, so maybe 25% increase so far. So I'm looking to squeeze a little bit more out of that trade there. Also, IBM was really jacking to the upside yesterday. Thought it was going to be looking really good to cover maybe even today. Had a couple of big moves on the upside. Remember yesterday I did the covered calls on this trade and was thinking we might get a break above this 50 Fibonacci, and that would really put my short calls in play. I'd love to be called away at 29 from this IBM trade. If it happens, I'm more than happy to get out of that. Otherwise, though, we're right there at the point of control. If we start getting stuck in a rut right here, that's perfect for my strategy. The IBM's in the black. We've got those short calls that will start to expire relatively, or start to erode very quickly, because I've got that thief in the night theta coming in and stealing those premiums. Heading into next week, it's going to start really ramping up. So all of those two trades are really starting to work out nicely, and I'm going to ride those out at least probably until next week, see how things start to shake out. But right now, everything's starting to move in my direction, so I'm happy about that. All right, that's it. Hope everybody has a great holiday weekend. Happy Thanksgiving to everybody. Please take a moment to go over our disclaimer over there, and that's all I got for you, other than if you can't take that, take it easy.